Hi, everybody. Welcome to podcast number 4 of This Week in Innovation. I'm Jeff Roster, former Gartner and IHL retail sector analyst, now serving on several advisory boards, and most recently joining the advisory council for the Center for Retail Transformation at George Mason University. I'm here with my partner, Brian Sathianathan, co-founder of Iterate.ai and a veteran of several successful exits. Today's subject matter is the blockchain, separating the benefits from the bluster. Anoop Nannra, global blockchain segment leader, AWS, joined us in a recent Clubhouse room to unpack this for us. Let's listen in. Hello, everyone. Welcome to Blockchain Separating the Benefits from the Bluster. I'm here with my good friend, Brian. My name is Jeff Roster, former Gartner and IHL retail sector analyst. Brian, how about introducing yourself and our guest?
Yeah, perfect. Thank you, Jeff. Brian Sathianathan. I'm a serial entrepreneur, and I'm also a co-founder and chief digital officer of a company called Iterate.ai. Extremely excited and interested in the innovation space, investments, as well as technology that is driving innovation within enterprises. And with that, I would also like to introduce Anoop. Do you want to give a quick introduction to yourself?
Sure. And first of all, thanks, Brian. Thanks, Jeff, for inviting me to your room today. By day, I'm the global head of the blockchain partner business at AWS. I work with partners, both technology and consulting partners, to help drive growth, build new solutions, and really focus in on how do we grow the TAM for everybody in this space. And I think it's a really compelling, really exciting space. We've seen so much innovation over the last couple. I've been at AWS for just over a year, and prior to that was the managing director of Cisco's blockchain business, which we incubated from a couple of slides to going off and getting some real funding from the CFO, the board, the CEO to go off and build a capability for Cisco customers, and really look at how do we transform the state of the network when we start introducing concepts like trust and transparency. And so did a lot of very interesting work there. I built out probably at the time was probably one of the largest blockchain supply chain network. When I left, we were tracking north of 300 million products in real time. Yeah, it was pretty exciting. It was probably the biggest blockchain project you never heard of, but it was a great exercise. Learned a whole lot, and then as that was, then started looking at potentially how do we spin out, create a startup, and look at how do we take blockchain technology and fundamentally embed it within switching and routing infrastructure. And we pioneered a new model of consensus. They say timing is always critical. What we found was the timing for our startup was a tad too early. We're probably 3 to 5 years too early. And AWS came calling, and I said, hey, let's have a journey there. Prior to all my blockchain experience, I spent a lot of time in cybersecurity, threat intelligence. Brian knows me from my days in the media and entertainment world. Built a lot of very interesting solutions in the telco space, and continuing to have fun. And
it's a fun story how Anoop and I met. Maybe I should tell it now, Anoop.
Yeah, go for it. So I was just going to say, and the other thing that I'm doing is I'm co-founder and chair of the Open Sustainability Collaborative. There, we're taking a people-based approach to developing sustainability solutions and enabling corporates to actually accelerate and make good on their sustainability commitments. So there's been a lot of reporting in the last couple of months where there's a lot of significant misses around sustainability objectives. And we want to help create startups, create opportunities where those innovators can go off and address a pretty significant gap, I would say.
First of all, Anoop, thank you for joining us in this session, because this is a topic I think there's a lot of questions a lot of people have. Right, and this session is also going to be available in our This Week in Innovation series. So it's available in iTunes and numerous other locations, and Jeff can tell us more about it. And also, Anoop, congratulations on your open initiative. I think that's definitely interesting as well. I got a chance to learn more about it a couple of weeks ago. It's super exciting. Congratulations again. The other thing is, it's a funny story so when I sold my first company, it was, we ended up going and meeting all the carriers. That was part of my deal. I have supposed to propagate the technology and help increase sales and targets and everything. So we kept on talking to a lot of Canadian carriers, US carriers, So we had a trip to Canada, and one of the carriers we met was Rogers Cable, right? One of the largest family. I think it was a family-owned at the time, cable company. And then we went to Rogers, and I think somehow the sales guy messed up the meeting, and I think we ended up, but Anoop was gracious enough, and we ended up talking in the cafeteria, and soon we became friends. And then I was in a panel at Turner, and then the guy in the audience was actually like very familiar. I know this gentleman, right? And then I recollected my memory, and it was Anoop. Then that's when Anoop came here to the US and started working for Cisco and started building this blockchain initiative. So it's a small world. Things move really fast. But thanks again. Really appreciate you being here.
Yeah, no worries. I think those days at Rogers were equally exciting, not tied in any way to blockchain, but really looking at how do you transform a multi-billion-dollar company and a multi-billion-dollar business within at that time, I think still a family-run but publicly traded firm in one of Canada's largest operators. And so really interesting times and learned a lot. But then I said, okay, you know what? I need to go spend some time in the Valley, and that's what I did.
Perfect. Maybe one of the things we can do, Jeff, is to start the conversation by talking about just the blockchain and the market, and then we can help us think through how it has evolved and where some of the value is and what are you seeing now. Pick that up.
Sure.
Yeah.
So let's start with Gartner's definition of blockchain, and Anoop, I'm not sure how you feel about this, but since I'm an old Gartner guy, I always like to go back to the mothership. Gartner defines the blockchain as an expanding list of cryptographically signed, irrevocable transactional records shared by all participants in the network. Each record contains a timestamp and reference links to previous transactions. With this information, anyone with access rights can trace back a transactional event at any point in its history belonging to any participant. A blockchain is one architectural design of a broader concept of distributed ledgers. And when I look at, Gartner hasn't published, I haven't seen any published estimates of market size, but IDC just recently put out a piece, and they're describing, I'll just read it. Today, IDC published its latest blockchain spending forecast, estimating that in 2021 will reach $6.6 billion, a 50% increase over last year. It expects to see a 5-year compound annual growth rate of 48% per annum, which means nearly $19 billion is forecast in 2024 blockchain spending. Anoop, I won't ask you to agree or disagree with those numbers unless you'd like to. But man, that seems like an awful lot of money. Does that sound remotely accurate, that there's that much money being spent in this space?
So I'll first start off with your definition. I think Gartner's definition of blockchain is more or less accurate. So I look at any time that you leverage the model of decentralization, and by training and education, I'm a distributed real-time engineer, right? And the whole notion of having completely distributed infrastructure, having to coordinate and synchronize. One of the questions that has always existed since a long time, over 30 years now, is how do you actually maintain, integrity of the replication? How do you also maintain integrity and proof of integrity of the underlying infrastructure that, is powering all of these now blockchain networks? And so I think the definition is still accurate, it's still valid. I think what's really interesting as we look at the evolution of the technology in this space is just the vast number of protocols that are being created. And I think there's a lot of innovation that's happening there. And with that innovation, I think is in fact coming along with the spend. Right? I couldn't tell you, but definitely from an AWS perspective, we're seeing more and more customers looking for blockchain solutions. We're seeing more and more partners trying to figure out how do they actually partner with AWS because they are seeing the kind of demand. So I think there's something in those numbers, whether they're plus or minus 50% or plus or minus 15%. I think time will tell, but definitely cryptocurrency use cases beyond the classical supply chain track and trace use cases. There is a growing amount of demand. And largely, I think that's been driven by some of the early movers in this space going back to 2014, 2015, where there was a lot of kind of upfront investment and investigation in the technology. I think a lot of those actors have got some lessons learned, and their use cases are now a little bit more concrete. Their ecosystems that they interact with have also, been on that journey. Even those folks are a little bit more concrete on the kinds of use cases that are the most impactful and meaningful to them. And what we're seeing is in this time around, coming out of crypto winter, surviving 2020 and COVID, and kind of the need to drive business continuity as a primary as opposed to just innovation. We're seeing more, I think people are more aware, they're more comfortable with blockchain and in all its variants. And they're asking far more meaningful questions now. It's about how do you drive go-to-market? It's about how do you drive scale? How do we perform lifecycle management for users and organizations? And that's largely from an enterprise perspective. But even on the public side, I think we're seeing a lot more maturity in how blockchain can be used, how it can be adopted. Obviously, we've seen some very interesting things from like Tesla and MicroStrategy, which is a step in the right direction, but I wouldn't say that's innovative enough. I think there's more that companies like that can be doing, but they need the tools and the support to do that. And so I think there's a journey, but I think there's something to the numbers that IDC is producing.
If you cut that number, if you cut that number in half, that's still $3 billion. If you cut it by 75%, it's still $1 billion, which to me, it's an amazingly large number. So yeah, it seems like there's just a tremendous amount of activity. Maybe that's where we can drill in. What verticals do you see? Are you looking at this by vertical at this point, or are we still looking at this fairly horizontal?
At AWS, we look at blockchain technology as a horizontal technology, right? So it's one that fits into a number of industries. But more importantly, we look at the entirety of a solution. And blockchain solutions of their own are great. They're interesting. A blockchain solution that is coupled with IoT, coupled with machine learning, data analytics, data lakes, those are even more compelling. And it's the narrative has changed and evolved since I got started in this space to now where we're leveraging blockchain technology to provide data and process integrity. But blockchain is a data-rich and operating environment. And so there's copious amounts of data and metadata that can be extracted. Why are we not looking at mining some of that data, processing some of that data, generating some insights? And we're seeing folks like Chainalysis and Curve and Elliptic go that next step. And I think that's where we're going to see the next round of innovation in this space, is when we start integrating it with orthogonal technology to build more complete, comprehensive end-to-end solutions.
Brian, I cut you off.
I don't know if I answered the question.
Oh, you did. And then there's about 150 more right behind it, so we'll get it. Brian, I think I cut you off. I've got a whole bunch, so just fire away. I'll work my questions in too.
No, Jeff. No, I think these are all wonderful topics, right? Because I think one of the things I was looking at the predictions, because I think everybody has slightly small differences in their predictions. Like, for example, if you look at IDC versus Grandview Research, where I think there is one prediction where Grandview Research says is that probably at like 60-70% CAGR, and in 2028 probably even be up to about 385 billion or 83 billion market size. So that's a pretty large market it can grow into. But what was interesting is in some of these research, they also point out there is a lot going on in the enterprise on the private side of the blockchain. What do you see, Anoop? So are you seeing that enterprises, as they are adapting to blockchain, they are participating with new protocols and things like that in the public side of the blockchain, or they actually have bringing up their own private blockchains or hyperledgers? What are you seeing in terms of what they are as enterprises are adapting?
Yeah, it's a good question. We're seeing some pretty dominant. We're seeing some protocols become more dominant in this space. Obviously, Hyperledger Fabric it's a major contender in this space. We're seeing a lot of projects around Fabric, but we're also starting to see enterprise Ethereum projects. One of our strategic partners in this space is Consensus, and there's a lot of really good work that's coming out of that team. And what we're really eager to see is how they take the acquisition of the Quorum technology from JP Morgan and really take it to the next level. So, I think that's going to be really cool. R3 is doing really well when it comes to the adoption of the Quorum technology. And you've got these different flavors of blockchain technology, and sometimes I think a purist might dismiss them. But what's really important to understand in the enterprise context is what customers are really looking for is the means to drive accountability, the means to drive compliance, and do so in a model where you maintain efficacy. You maintain the provenance of data and how it was processed, any events that occur. What is the efficacy of that? And how do you get anyone to actually believe in any of those transactions? So there's definitely an evolution. One of the other observations that I've made is, while there are a few customers who say, "Hey, I'm going to go off and build a network," by and large, the discussion has changed. The discussion has changed to what is the solution and does it attach to an existing network, right? And whether a customer is looking for a document management, or they're looking for a land registry solution, they don't necessarily want to build a blockchain network. They want to attach to an existing one, whether it's a public or a permissioned enterprise blockchain network. So there is some variability there, and I think it's an interesting mix. On the other end of the spectrum, we also see customers who want the cryptographic proof. They want the immutability, they want the transparency, but they don't necessarily, or they're not ready for decentralization. And what we at AWS have done is we launched the Quantum Ledger database a couple of years ago. We're seeing now that there are actually customers who have spent money, they've spent R&D dollars, they've done the experimentation on decentralized approaches to data and process integrity between themselves and their external stakeholders, but they might have come to the conclusion that actually they don't need decentralization. What they're more interested in is the immutability aspects, the cryptographic proof that blockchain technology inherently gives you, but can they now do that with a centralized offer? And on one end of the spectrum, we've got our QVODB service that kind of fits the need in that regard. What I would say is definitely much more sophisticated conversation around how do we actually build a business, whether that's growing a business or actually building an entirely new business with blockchain technology, as opposed to customers and partners asking about what blockchain actually is. I think there's this inherent up-leveling understanding of what the technology is. I'll pause there.
Yeah, that's an interesting point. If we were looking at, we worry about the startup worlds, but we definitely, Brian and I both have our feet in retail, CPG, e-com. What level of adoption do you see in our space here? Are we at the earliest stages, technology trigger in Gartner hype cycle world? Or are we a little higher up the hype cycle?
I think it's still early in the retail space. Obviously, we've seen some luxury brands, we've seen Walmart do some projects. I'm still waiting to see these kinds of retail customers actually deploy a solution and at global scale, right? So lots of pilots, lots of POCs, lots of great learning. Very few of them have actually made their way to full-scale production. And so I think it's early. I think there's still, as Brian mentioned, while retail is definitely innovative, and we've seen a lot of really good innovations over the years, when it comes to actually taking a technology and driving it to scale, I think they're a little bit slower. I think we're definitely on a upward trend. I'm still waiting to see a top retailer be able to provide, let's say it's a fast fashion, on the label of their garment, a QR code that points to an address on a blockchain network that proves just how sustainable that garment is, and the chain of custody, the genealogy, and the overall carbon footprint of the entire value chain, from when the threads were created through to they're on a retail floor. We're still waiting to see that end-to-end value chain, but I think it's now doable. The technology is there, so I don't think it's a technical problem. I think it's more now, how do we get the rest of the value chain enabled, activated, and plugged in so that they can provide these kind of next-gen retail experiences.
I do agree, Anoop. Yeah, because I think, like you pointed out, that retail, we are still waiting to see some of these cases unfold, because I spend a lot of time talking to retail leaders. And one of the things, there are 3 or 4 cases that I've been talking to them about. One of them is, of course, the traditional supply chain, right? The track and trace, the stuff that IBM has been spending a lot of time in, and a lot of vendors in the blockchain has been, right? very much a supply chain type use case, a provenance type case. We've spoken to retailers in the home goods DIY space, especially for things like timber, right? Applying this type of technology in things like timber and so on, but to track the timber and furniture, especially for DIY. The other area we've spoken, which I thought initially that we would get a lot more traction, is to use blockchain for loyalty, because there's a lot of retailers are carrying loyalty points on their ledgers because of, and of course, as loyalty points are a massive liability, right? Because and that's why they always methods to figuring out how to burn loyalty points quickly through alternative mechanisms. I initially thought that there would be a bigger propagation in loyalty touching or kind of attaching to blockchain, but it seems that is propagating slower than I thought. And then the third case I think which is also interesting, is for luxury retailers, for provenance and telling the story, because when it comes to luxury retail, it's always about just telling the story more effectively. Because if you are paying a premium price for any of the luxury brands like a Cartier or any of those brands, the biggest value proposition is the uniqueness and the exclusivity. So how do you tell the story of exclusivity? So that could be registered in the blockchain, could be certified by blockchain. And I've seen some interest there, and where large premium brands are sort of gravitating towards that. Because I think that's also a little bit more like an end consumer use case opposed to a use case where you need to go and change core IT infrastructure, like the track and trace and so on. So I think because retail is a very cost-sensitive industry and a very cost-conscious industry, some of the first two cases that I thought would make faster propagation probably did. Any thoughts on that, Anoop? Are you seeing similar type of a things, or like anything new or different? I just want to get your thoughts on that.
I've seen like the broad spectrum of things. One of my favorite companies in this space is Chronicle, and one of their earlier prototypes was actually embedding NFC tags into Nike branded apparel, so that you could prove authenticity, you could prove the uniqueness of that asset. If Kobe Bryant owned a pair of shoes and they found their way onto a marketplace, the fact that you could actually cryptographically prove that Kobe Bryant actually owned these shoes means that there's a premium to that specific item. I think what's interesting is, while there's a lot of really good use cases, I think one of the challenges is that we still haven't seen the rest of the value chain or the rest of the ecosystem catch up to where a lot of these premium brands or where large brands are thinking in terms of how they transform the end user experience. So like I said, I'm still waiting for the ability to walk into a Macy's or a Nordstrom and scan any product on the floor and be presented with the full genealogy and chain of custody, and as a potential investor in a Macy's or a Nordstrom stock. If I'm now a socially conscious or environmentally conscious investor, the fact that I have this tool available to me gives me confidence to actually put my own money, into these companies. And so I think to your point, a part of the challenge that exists is we still haven't quite figured out how to communicate the value of blockchain to the broader ecosystem. And so I think for the early adopters, the fast movers that were involved, I think they got it, they had the curiosity, but it's been largely driven through a technical lens, right? The business value from an enterprise perspective, I think we still need to understand and identify what the actual personas are of the different stakeholders that are involved, and figure out not how do we educate them about blockchain, but how do we educate ourselves about their role and their function in the business that they're in, the industry that they're in? Do we actually understand their business and industry so that we can actually build that decoder ring for ourselves, so that we're actually effectively communicating what blockchain is in their terms? And I think that's still a gap, but it's definitely changing. And I'm optimistic, but to your point, loyalty points, I think was a great use case. Starbucks, I think, is, last time I checked, was one of the biggest banks in the U.S. just because of their loyalty points for their card program, but that's not their core business. And so how do we actually effectively convey the value that is aligned to their core business. I think that there's just more work to be done there.
So
absolutely. No, that's a great point, Anoop. Sorry, Jeff. One quick question I have is, so regarding the business value, right, in terms of as vendors are talking about blockchain to retailers and also even other traditional industries, what's your advice on how should they think about creating KPI, and how should they think about telling the story from a value perspective? Because that seems like one of the things that's harder to propagate, right?
Yeah, and for that, I'll go back to my Cisco example. We looked at dozens of internal use cases, right? Everything from supply chain to procurement, how we do equipment leasing and financing, how we bring in contingent labor. And all the while, we were always challenged with what's the value, right? What's the business value? What's the business impact that you can deliver with the technology? And we went through some pretty lengthy analysis to really understand, as a Fortune 100 company, how do we deliver value in an environment where, as a Fortune 100 company, you're already hyper efficient? How do we take that into account, and how do we prove it? And so what we realized was one of the things that we really need to be very clear up front and early on was, to your point, what is that value and how do you measure it effectively, credibly? And for a company like Cisco, where it's all about revenues by quarter, how do we showcase the impact in a quarter, not in a year, not in 3 years from now? And after going through a bunch of analysis, what we landed on was, no surprise, a supply chain track and trace use case with our supply chain organization. And what was really interesting was when we started, we didn't realize that Gartner had ranked Cisco, in the top 5 of supply chain efficiency beneath the masterclass for supply chain. And to be in that, top 5, even top 10, you have to be a hyper efficient company. And the way that you engage and interact with your supply chain, your partners, your vendors, your logistics providers, there is today by necessity, real-time telemetry that is required. There is on-prem equipment to track the production of components, telemetry from trucks so that we know where things are moving. But that was all built in a centralized fashion. And the task at hand was, how do we now compare that, and how do we measure, and what's the use case that would allow us to measure credibly the efficiency or the improvement that a blockchain network would be able to provide in that kind of environment? So we set on the journey to really understand the next layer is a supply chain, and there are supply chain efficiencies that are constantly being developed. Supply chain is never a static thing; it's always moving. And where we were upon some investigation, we said, okay, let's actually look at how do we instrument and equip the supply chain network, the value chain, so that we can actually identify gray market and counterfeit products. So a use case that is easily relatable to in other industries, and one where if we can actually deliver an impact, even if it's just a couple of points, that's still a significant impact at the scale of Cisco. And so we worked with our brand protection team, which is a part of our chief legal office at the time. And we said, what do you guys do when there's a gray market or counterfeit issue? And what we found was a lot of the responses that are generated are responses to an event. So it's after the fact, right? A gray market or a counterfeit product will make its way into the supply chain. It gets delivered to a customer. Maybe a year down the road, that product fails. The angry customer calls Cisco. Because we're Cisco, we're going to make that customer whole. We figure out what the problem is. The brand protection team gets pulled in. They do a lengthy analysis. It might take them, a couple of weeks to a couple of months to figure out where this thing came from. And all that time, there's cost, there's over delivery in some instances. And when we looked at the business case of this, it was in, the billions of dollars. And so we said, okay, if Cisco is ranked in the top 10 of supply chain efficiency, and we still have these kinds of 9-digit gray market and counterfeit problems, there's an opportunity here to actually showcase and do something really compelling. And so that's what we did. And so we built out the network. We instrumented a number of our supply chain partners, vendors, and within 6 months of having the platform complete, we were tracking, I said north of 300 million products in real time around the world, which was great. We had a pretty high metric. The question that we got is, okay, great. Now what's the value? Right? You've built this network. What's the value? And what we had discovered was because we had actually put this system in place, we were now actually able to seize gray market and counterfeit products before they got to our customers. And that's a capability that hadn't existed before. And within 6 months of that, we had already paid back the entire investment in building out the entire blockchain business and the team. And so right there, we said, okay, here's the business case and here is the value. The value is you've got a much happier customer. You have a customer that is knowingly getting legitimate goods, legitimate products. They can prove it to themselves. The value is we're not having to spend as much on brand protection. And from a services perspective, which is where a lot of people, forget, it's not just about the opportunity loss of gray market and counterfeit products because you're not selling or your partners aren't selling or getting the right product. But from a services perspective, each time a customer calls, they're calling the services team, the customer experience team. And there's a team that gets activated and they go in and work with that customer to figure out what the challenges are, what the risks are. And so for products that are outside of the value chain that are coming in, they are technically not under a warranty. And so now we're having to go out and make good on a warranty claim that isn't actually a warranty claim. And so we're now over delivering. The costs associated with gray market and counterfeit, as a lesson learned, are far reaching when compared to just the actual product themselves. And so that was a great exercise. And I think as we're starting to see more and more companies look more closely at their supply chain use cases, they're starting to uncover what some of these latent or hidden costs are. I'll pause there.
Wow, that's
Wow.
my head is just spinning thinking about the LP aspect of it. I'd never even really thought about the LP aspect of it, but that drives our losses in retail are in the billions from what is it, grayware or fakeware or imitation. So that's almost you can't put a number on that. Curious, and Brian and Anoop, probably for both of you, is blockchain a standalone capability or is it baked into next generation supply chain software? Do I have to build a category for blockchain spend in retail IT, or is it just going to end up being baked into existing capabilities?
I'll take a crack at that. My own personal belief is nobody is going to go out and buy the next gen fandangled database, and similarly, no one is going to go out and buy the next gen fandangled fancy blockchain. What they need to do is look at the solution and figure out whether or not a blockchain technology is actually required. So if I look at, and my own personal goal is to make blockchain technology similar to IP, in that there was an early day and IP was one of those technologies that was, competing with, ATM and frame relay and a whole bunch of other things. It won out in the end. But today, 20 years on, nobody talks about IP. We talk about e-commerce. We talk about online gaming. We talk about apps like Clubhouse, right? And it's what my goal is, and the reason why I continue to be in the blockchain space is I want blockchain to be part of the underlying infrastructure. It's pervasive. It's everywhere. When you want trust and efficacy and provenance, you can simply subscribe to a capability, get the value that you're looking, and you don't even realize or care that there's a blockchain network underneath it. And, I'm seeing some really interesting HR platforms that are being built out now that from an end customer's perspective, the HR team doesn't even know that there's a blockchain network running underneath all of them. And so I think that's the transformation that I'm really excited to see.
Oh, interesting.
I would completely agree with Anoop, because I think the utility and the solutions and applications around it is what going to matter end of the day. And that's also going to propagate it a lot faster. Because in parallel, if you look at the AI industry, Anoop and as well as Jeff, the reason it's propagating faster is because it's all tied to use cases. And AI is a buzzword and everything, but the use cases around it is just propagating like wildfire. So I think that is something that we are going to be seeing happening with blockchain as well. As more and more leaders understand the use cases, like what Anoop was talking about, they begin to implement them within their companies. And then those cases would basically be written as stories, and they would create a great template for other leaders to follow, which would create a faster speed and pace of propagation. Having said that, Anoop, I have a quick question for you. As you are seeing, because there's so much enhancement, one of the problems that everybody struggles to keep up with this pace is that it is just growing at a rapid pace, right? Every day you see a new blockchain startup, and every day you see a new protocol, right? And every day, like people trying to handle the problem of proof of stake, which is or the various proof concepts. Because one of the problems in the current Ethereum and those blockchains is computationally very intensive, right? So how do you make a highly scalable blockchain? And then the speed at how authentications could be done, or even the problems of how quickly or how small the blockchain has to be. As you just like the same problem IP had so many years ago before IPv6 came in, right? When we had IPv4, which we still do have, right? Like, if every device in the world is going to have an IP address, can we sustain it, right? Similar concept. Can we have a limited form of blockchain? So there is so much innovation going on, right, in this entire space at such a rapid pace. What do you see, think, at least from your perspective, I'm sure it's going to be very subjective, but from your perspective, in terms of all these new things that you're seeing, what do you think is going to be sustainable? What will take off? And just a subjective view, just to hear your thoughts on it.
Yeah, it's a great question. So my own belief is that we are still early in the evolution of this space. As AWS, we love all protocols, we love all projects. 25%, I think, of all Ethereum nodes are running on AWS today. We see a pretty healthy business. This is a space where, if we're lucky, we will never be product feature complete. It's a continuous journey. And I think that's the exciting piece. The amount of innovation that we've seen in the last 2 years alone is probably double, if not 3 times more than the innovation that we saw in the same period a couple of years ago. I think we do need to see a lot more options out there on privacy and confidentiality. We've seen some very interesting advancements in things like zero knowledge proofs. It comes down to the technology is great. How do we actually convert these into large scalable solutions? And I think that's the journey. So my first industry org/nonprofit was the Trusted IoT Alliance, where we were the world's first blockchain and IoT industry consortium. And what we saw there was the need for multiple technologies to come together in order for value to be recognized, in order for people to step away from the technical jargon of blockchain. One of the things that we did was we ran a global design challenge series, and we ran 4 of these. The first one that we did was around smart mobility. And we actually worked with cities, a couple of OEMs, worked with Bosch, Siemens, and we actually said, okay, in order to drive adoption and to simplify the language of blockchain, how do we come up with use cases that the common person can understand? And so what we did was we ran the first challenge, which was around smart mobility, and we got an electric Jaguar. And we blockchain enabled it. And we blockchain enabled parking infrastructure. And we blockchain enabled buildings. And we drove the Jaguar from Barcelona to Berlin, entirely operated, insured, charged, using blockchain technology. And what we realized coming out of that was, one, we need to do a better job of simplifying the use cases so that the average person can understand. And one of the use cases that we came up with was, how do you now park an electric and autonomous vehicle in a blockchain operating environment? And I think on paper, that sounds really simple. When you start designing the solution, it's the exact opposite. What happens if Jaguar and the parking infrastructure use completely different blockchain and wallet technologies? How does that work? And so we were actually able to showcase some of these questions. We saw some solutions get built, and really we dove deep on what might be the key enabler that, enabling use case that would allow for the average person to start looking at this as not just a technology, but something that allows them to simplify their life. Everyone has struggled with parking at one point in their life in a major city. What if we were to simplify parking? What does that look like in a blockchain environment? So, I think that's where we saw some very interesting use cases emerge. But what the more important thing that we discovered was we need to do a better job at simplifying the language and what have you. So I'll pause there.
Wow.
I hope I answered the question.
Yeah. How do I get on that driving the Jaguar gig? That sounds like a great project.
that was going to be our next question.
Exactly. What do we do with that, Brian? Let's do that. So what, I always boil everything down, Anoop, always boil everything down to NRF, and it helps me understand where we are in adoption. NRF is National Retail Federation's big trade show for us in retail and e-com, 30,000 people in sunny New York City in January. Will there be a floor dedicated to blockchain, or will there be just pieces of blockchain capability in the various vendors? AWS last time we were there, a year and a half ago or so, had a pretty big booth. My guess is your booth will probably be 2 or 3 times the size it was previously. Or so how is blockchain going to be consumed, I guess, or built out? Freestanding versus built into Oracle, SAP, Microsoft, AWS, all the various key vendors?
That's a good question. And my own personal belief is that this is a beneath the fold technology, right? Kind of like I was saying before about IP. I kind of say, the first rule of the blockchain club is we don't talk about the blockchain. But I think that's where we need to get to, and I think we need to get our customers, regardless of what sector, comfortable with that. I think what's missing beyond kind of the language and the communication is just the tooling and support to enable, in this case, retail customers to actually adopt these things at scale. I think we'll definitely see blockchain at NRF. It might not look like blockchain at NRF. I think it'll be something that is embedded into, some other broader technology or broader solution. They often say that blockchain is a hammer looking for a nail. The mental model that I always take is I'm walking around with a toolbox, and 25% of the time I'll have something to hammer in, but it's going to be something that I'm going to attach something else to. I think that's the journey that we're on.
So are you evangelizing to retailers and manufacturers and hospitals, or are you manufacturing to the vendor community to build those capabilities? Or probably the answer, I'm assuming, is both. But what?
Yeah, the answer is both. I spend most of my time working with our partner community, startups, ISVs, SIs, to really help them understand, one, how to best use the AWS platform to deploy blockchain capabilities, but then also how do we actually build these solutions? And what I found over the last year and a bit is that the types of solutions that blockchain projects use, or the types of components, technologies that blockchain solutions are using, are not just your classical EC2 or S3. We're seeing a lot more, analytics and data lake capabilities being leveraged by blockchain solutions, right? And so the fact that we've got these orthogonal services that are being brought to bear to build a more robust, more resilient offering by our partners is a direct signal to me that blockchain of its own is of a certain amount of value. But as you package it with other capabilities, the value of that solution goes up tremendously. It's kind of, if you buy a thermostat, that's $25. When you connect the internet to that thermostat, it's $250, right? We've seen a lot of these technologies converge around a specific solution, a specific product, and that drives the value. As we look at end customers looking for blockchain capabilities or blockchain solutions, what I like to do is really understand, okay, well, are they actually clear on their business problem? And if they're clear on their business problem, do we have the right partners who have built out solutions? Do we, AWS, have the right capability and sophistication and completeness of product to actually address those needs? And so, to answer your question, we do both, right? We work with the partner community, that ecosystem, and then we also work with customers to really help them understand, one, the breadth of our portfolio, but then also the breadth of our partner portfolio as well.
So looking for the partners on the end user side, and just the LP piece is fascinating, but that's loss prevention. Then there's supply chain, then there's merchandising, then there's obviously the C-suite. Are you seeing one particular group come out and champion, or is it just whoever the innovation person is in that organization that brings it to these other groups? It just sounds like it's an inevitable solution that has a whole lot of cooks in the kitchen to make this thing work.
Yeah, no, you're right. And in the early days, and to a degree, even still today, it was a lot of R&D and special projects teams that were championing the need for blockchain technologies and blockchain projects. I've always believed that the decision maker needs to be the line of business, and they need to be the one who are championing not just blockchain, but solutions to real business problems that just so happen to leverage blockchain. And increasingly, and it varies sector by sector, we're seeing the seniority of the executive sponsor increase. And as you look at, we haven't really talked about this yet, but retail and sustainability, now we're seeing executive compensation being tied to sustainability. And one of the biggest problems, I think, in sustainability driven by greenwashing is, where's the proof? How do you prove it to me? If you're making a claim and you're making a claim against a position or a statement, prove it. And I think, that's where we're going to see a lot more blockchain or blockchain-like technologies get picked up to provide the efficacy around getting to carbon neutral. There's still a big gap there. And as some of the more interesting comp models get changed, the incentive models get changed, we're seeing a completely different set of executive stakeholders than we saw 3-4 years ago.
The whole sustainability question, you just added yet another whole different arm of a retailer.
I definitely think that there's a lot more to be done in food safety, and I'm excited.
Would it be fair to say that we're still in the very early phases of this adoption? And if so, what would be like the leading indicators that we're about to reach at least the tipping point, if you will?
I do think it's early. If I look at the amount of product that is actually being tracked by these solutions, it's a drop in the bucket, the global food supply chain, and the global amount of food that's actually required. I think one of the, I think there's one metric that says, well, how many bushels of corn or how many pallets of shrimp that are tracking. I think that's an interesting metric. But I think the more important metric that we might want to consider is, how do we eliminate food wastage and food spoilage using these food safety solutions? I forget the number, but there's a ridiculous amount of, metric tons, millions of metric tons of food that's spoiled every year in the U.S. Can we actually, cut that in half over the next 5 years by leveraging some of these solutions? Now, I think there's work to be done. I'll pause there.
Yeah, Tim,
another thing that's also interesting.
I tell you, there's a whole lot to think about, and just I can't even imagine how we're going to count the numbers on blockchain out 2, 3, 4 years from now. At least as an analyst, not either yours or Brian's worry, but those of us in my profession. Was the pandemic a driver or an inhibitor for blockchain adoption, or just net neutral?
My personal belief is that it was a driver. All of a sudden, I saw projects get kicked off in response to COVID impact and the pandemic shock that set in. Obviously, we saw a lot of very early projects get kicked off around vaccine registrations and whatnot. A lot of track and trace solutions get kicked off around vaccine distribution and supply. And I don't think those are going to go away anytime soon, unfortunately. It's one of these things. But I did see an uptake in customers having a real honest and earnest requirement that the solutions that are being built to better manage themselves as businesses in the pandemic might be based on blockchain technology, because what the pandemic has shown us is that our supply chains are incredibly fragile, right? Across the globe. And if there's a way where you can actually build a more resilient supply chain as a result of adopting blockchain technology, that there's an appetite for that. And so I wouldn't say we saw a significant uptake, but it was definitely not neutral, and it definitely was positive.
Yeah, we certainly had a lot of focus on the supply chain, and finally, good and bad. I think the American supply chain, boy, took a sucker punch and came roaring back. So hopefully that'll drive some investment. I guess the last question I'd have, and thank you so much for the time. You've been way more than generous with it. As a researcher, as an analyst, how would I ask questions about blockchain to retail CPG? Is that a strategy question? Are you interested in blockchain technology? Is it a supply chain question? How do you even begin to study this for us in the analyst world?
I think there has to be a recognition that there is a new class of investor that's emerging, an investor 2.0, and that these investors are thinking they come with an ESG perspective. And so if you're a retailer or if you're a luxury goods manufacturer, and we're already starting to see some of this, they're trying to now make sustainability front and center of the products and the services that they make available. I have seen customers move away from, one cloud provider to AWS because we have a more believable, more solid sustainability story. So that's changing. I think that's not going to go away anytime soon. I think if anything, it's going to accelerate. So this is, I think, where there's an opportunity and time to really rethink for a lot of these brands, just what is the value prop, that transparency and integrity of business and data, and how you make some of that available, to your end customers. There's a really good point in time right now for all these brands to rethink about that and put in place solutions that, deliver I think there's a next gen user experience, right? I never thought about asking about the carbon footprint from that goes into a t-shirt that I'm about to buy. But now I do. And so as buying patterns change, as investment patterns change, I think we're going to see a lot of improvement, I think, in the retail experience.
Very interesting. Brian, do you have any final questions or thoughts? This is going to be a major evolution as we get a year or two into this, just thinking of these numbers and the ramifications and the implications. Wow.
Absolutely, Jeff. I think I fully agree with you, and I don't have any further questions or comments, but I also want to thank Anoop for graciously answering all the questions and helping us as well as our audience think through some of these complexities, because as we are spearheading this type of innovation, we want to help our leaders in this space and help them understand the use cases better and how to propagate it better and what are the right questions to ask. And I know all your advice has been tremendously helpful. Thanks again.
And
thanks for having me, guys.
Oh, our pleasure. Believe me. Is there any place that retailers, CPGs, business folks should be looking at? Is there AWS blog on blockchain? Any place you'd want to send them? And we could put those in the show notes.
Yeah, we have a couple of assets, AWS assets on blockchain that are out there. I can send you guys a list afterwards, and you can get those integrated. I think this is a space where I sit back and I look at going from hiring and building a team in the blockchain space to building and transforming through industry initiatives to now building partner community. And I honestly believe that we need 10 times more people building blockchain solutions and blockchain capability. I think there's not only a number of really good business, well-grounded in business case opportunities out there, but if I look at the trends around sustainability, I think we just need more people. We need more universities teaching more about blockchain technology, not just a class or two, not just a course, an entire curriculum based on how do we transform industries and market structure that leverage and is powered by blockchain technology. As someone who's helping build this space with a bunch of other far more brilliant people, we just need more folks involved.
I'll be meeting with one university in 2 days on their retail transformation center, so I will absolutely be bringing that up, and maybe we can make a connection there, because I think the thing that's interesting about this is so data centric. So it's supply chain, but it's all data and security, and it's a lot of other components that are going to get universities really interested, even if they don't have maybe a deep expertise in logistics and supply chain. Thanks for tuning into today's episode. For more info, refer to the pod notes below. If you enjoyed this episode, please consider giving us a 5-star rating and review. It really helps us grow. I'm your host, Jeff Roster, analyst at large. If you want to connect, follow us on Twitter at JeffPR or at Brian Sathianathan, or connect with us on LinkedIn. Visit my website at roster.retail.com or Brian's at Iterate.ai. Until next time, stay safe and have a great week.